Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to have a collaboration with Filb, the famous guy who was pretty dead on accurate in the last market cycle. He's got his own YouTube channel, Filb, and he also is fairly active on Twitter as well. So if you're not subscribed to him, if you're not subscribed on YouTube or if you're not following him on Twitter, I would encourage you to go do that. So pause your video now, go do that, and I will link both of those in the description below. So you should have no problems doing that. It's a pleasure to have you here.
Thank you for having me, Ben.
So basically, we do this collaboration series where we just get the sort of, the general idea of where people think we are in the market. And so I'm really curious, there's a lot of theories about what's going on in Bitcoin right now. So what are you looking at? What do you think's going on, and kind of like where do you think we're headed?
Well, it might be a good time to share my screen. Actually, I may as well do that from the off if that's okay with you.
That's fine.
So obviously on the screen at the minute, I mean, we've got what I think you're quite. Can you see my screen? Okay.
Yeah, we can see it.
Yeah. Great. So we've got on the screen pretty much what you're quite familiar with, which is the logarithmic growth curves of Bitcoin at the minute, and sort of we're right bang on in the center of that at the moment. So I think a lot of people's expectation is for higher in the market, and that is certainly my view as well. I will build a case for that, but I do think there are some slight concerns in the short term, shall we say. So on the screen at the moment, what I've got here is actually the one of my indicators which I use, and what it is effectively it's a color candles indicator, but ultimately what's behind it, it's kind of like momentum in the market, and looking at volume and volume momentum as well. And with that, I've got the 50-day moving average as well. And for me, these two things are really important. So actually, we're on the 3-day time frame here. So as I say, we're sort of mid within the growth curve at the minute. But for me, normally when we're above the 50-day moving average, Bitcoin's bullish, particularly when we've got a green candle. When we're below the 50-day moving average, we're bearish, particularly with a red candle. So for me, right at this moment in time, yes, we're in a bull market in summary. However, we do have some slight warning. And these red candles can come about, generally can often just mean consolidation. You can see here that we had it actually below the 50 DMA. Obviously, we had the COVID dump here as well. And then we didn't quite go below the 50 DMA here, so it wasn't confirmed. But then ultimately, obviously, we had the pullback back in April of this year. So where we are as it stands right now is obviously we've retested the previous highs sort of towards the end of the cycle, and we are seeing a little bit of a rejection. However, we are also within a really nice strong consolidation and retesting the highs, which is obviously a good thing. So I do think overall we're probably going to work this out. And my overall summary of what we're saying here is that we are overall bullish, but we're potentially looking at a bear trap within what is going on here. So if we can get out of this consolidation, I think the measured targets are between 85 and 95, which would sort of front run that 100k target. But then overall, longer term, I'm looking at much higher prices. I like the 2.618 up here as a place as to where we may go. I mean, overall, the economy, the general political environment that we're in, I still think we're obviously suffering from a bit of a hangover from COVID, and still obviously some countries very much still very much engaged in some potentially, some people might say draconian measures to deal with the pandemic. And I think, this environment of supply side contraction and supply side issues within the economy means that we have this inflation concern specifically at the moment, which has come about at a time when also people are concerned about their sovereignty as well, and also a time when actually a lot of money is shifting from boomer generation to millennials. So we've got this perfect storm fundamentally for Bitcoin, where everything that Bitcoin's built for is the backdrop that we have overall is fantastic. However, there's a lot of bumps in the road, and I think we're just at a bump in the road at the minute. So that's kind of my general view as to where we are. So I am looking at these higher targets. I've got some fun charts that I put together back in the day. So this one's back in September 2020, when I observed that there's these things called Filb circles. I don't know if you've looked at these before.
I have a little bit, but I don't personally use them. But
yeah, I mean, I don't take them too seriously. I just think they're just interesting. That if you do a fib extension on them to the 3.618 for each cycle, so that's taking it from the cycle high to low in each instance. It has actually called the exact top in previous cycles. In this cycle, it's sort of looking up towards that 240,000 odd level, which is similar to these fib extensions. So, that 100 to 200k level is kind of where I'm looking at. And then obviously there was this chart as well that I put together, sort of ironically saying this time it's different. I mean, it is actually a little bit different, but that was sort of encapsulating the lengthening cycles theory back in Jan 19 or late 18, and we are where we are, which is pretty much exactly where you'd kind of expect us to be within the cycle. But that was being mindful of potentially a lengthening cycle. So I'm quite comfortable overall with that side of things, that Bitcoin is price-wise where it should be. And as I say, the economic background is very favourable towards Bitcoin moving up. It's just a matter of when and if and how rather than if.
It's kind of interesting that you mentioned that, I know you have it in quotes, right? Like, this time it will be different. But I mean, I'm sure as you're aware, right? I mean, it's sort of more the same thing, right? And the cycles have lengthened so far. Therefore, it makes sense. You put out some of these targets of 170, 200, maybe even higher, potentially. Do you have any inclination as to when that could occur? Like, do you think it's possible? I know I've seen some people predicting that it's still going to happen this year, within the next like, say, 5 weeks or so, because they're kind of expecting this like blow off top to happen in 2021. Do you think that there's any chance of it happening in 2021, or do you think it's more so destined for at least a 2022 market cycle top?
Well, I'd say at the moment, particularly, I mean, if we just look at this chart as which was a guesstimate, it was saying sometime within 2022, I think would be a reasonable expectation. A lot of what's going on at the moment, obviously, is looking at the massive expansion of M2 money supply, and while that continues, obviously, assuming Bitcoin does nothing and price was to stay the same in terms of real terms. In terms of nominal terms, Bitcoin has to go up in value. So while the Fed is unable to basically deal with inflation via either tapering too much or increasing interest rates, I think that it's certainly possible that we go through into next year. I think the big question is around how's the market going to react come towards the end of the year if we haven't put in an all-time high, and how do investors view their return on investment given that they're having to potentially invest for a longer period of time.
Right. Yeah, I think that makes a lot of sense. I think that it makes sense to keep people, so that the market's going to keep people on their feet. It's not just going to be an exact replica of the last market cycle. I do think that could you go back to the fibs where you kind of show the extension?
Yeah.
Could you actually could you go back to the first one you showed? So yeah, so can you the prior ones have they all gone to the 2.618, or have they all gone to sort of that region in the
Yeah, I mean,
past?
it depends on how you draw them actually, but let's just generally try and make it a bit quicker. So one thing that you do notice if you do this actually is that, oh, that's not the right one. Just a moment. If you do it like this, the top actually was getting towards 55k, which is ultimately what we did see over here. This particular extension itself would take you up another leg. So, you know, there is an argument actually that this actually did play out or has played out somewhat already. So that did pretty much happen on that occasion. Let's see where we should pull this from. So we got up to around about the 2.618 again, so it's all up at the top of these fibs up here. So I think historically we have seen that we do get those corrections about the 2.618. I mean, if you go and have a look at the alts in particular, the 2.618 of the fib extensions is a really good idea to see where people are going to look to try and take profit within a price discovery mode, because you don't really have too much else to work with. So yeah, the question is, should we just be assuming that we ended here actually in amongst these fibs clusters here, or can we actually pull it on and extend further into this cycle?
Right.
And that's open to debate. I mean, we've got a 50% drawdown here, which to me was like a mini bear market. So I think it is relevant actually. So we're seeing a cycle within a cycle. So which is kind of similar to what this was actually over here.
Yeah, well, I was looking. I think one thing that we kind of all look for is some like type of confluence among various indicators, and if we were to make it to the 2.618, and we also were to go to the top of this logarithmic regression curve, then certainly it seems like it would happen later in 2022, and very likely not even at the beginning of 2022, for it to actually get the juice to get up there. It's interesting that you mention a mini bear market. Because I thought too, like, how are we going to get through this long cycle without spending some time in bearish phases? So I think it does provide like some type of reset almost, where people are able to reposition and whatnot and prepare for a second leg.
Sure. I mean, Bitcoin's really, apart from momentarily sort of over here, Bitcoin's never really gone below the 200 EMA weekly, that is. Through its life cycle. So arguably Bitcoin's never been in a proper bear market.
Right.
So you sort of get these minor blips in the road. I mean, going back to this sort of ironic, this time it will be different sort of thing, you can see, I mean, even if just looking at the overlay, which I know you do all the time as well, the extension that we had this time versus last time, and last time was a bloody good extension back in 2017, 16, 17, we blew ahead of all of that. So I think it's perfectly reasonable that we needed to have that corrective phase to bring things back. But we know that this time was actually different, mainly because of all of that money printing and the climate in which we're in with it at the moment.
So I think we're pretty much in general agreement on where the cycle is heading over, say, the long term. Like looking at the macroscopic view. If you were to look at some, like, I think it's always smart to consider like the counter thesis, right? Like, what if we're wrong? What are some things you would be looking to unfold that could potentially invalidate, a move to 200K next year? Are there certain levels that if you saw Bitcoin go to in the short term that you might think like, okay, well, maybe we have to rethink this?
I think, well, certainly I wouldn't really want to see us put in a low, like beyond 30K. Like if we went below the lows back at 30K, I would say we're pretty much cooked at that point, know. But then again, that would also be taking us sort of down to the amount of time it would take us to get there now would take us to the back of the bottom of this logarithmic trend. And I'm not convinced that would give up. Okay, we had a blip over here, but we know why that happened.
Right.
So that would obviously, I think that would seriously invalidate the thesis. However, I would say that it's hugely unlikely at this point. Within this particular part of the cycle, we saw a huge amount of bid back at 40k. So this is the Trading Light platform, which shows basically where you can see orders on the order books. And if you just look back at the 41k level, there was a huge bid down here, and we just couldn't get below that, and it's still there now. If we were to blast through that and there was no buying, I would be seriously concerned.
Sure.
But again, at the minute, it doesn't immediately seem to be the case. I mean, what I would say is that there are other things that would concern me. So I've got a KPI report here which we look at regularly, which focuses on various different things like market cycle indicators, on-chain indicators, and short-term indicators as well. But specifically, like within this, there's effectively we have what's called the 1-year HODL wave chart, and what that looks at is the sort of percentage of coins which haven't moved for over 1 year, and what we can see at the minute is that is flat and has been flat for a significant amount of time. So what that says to me, in previous cycles, we end up bottoming out around about 42%. So we're at this 54% level, which is kind of where we were, around 2,500-3,000 in the previous cycle, which is exactly where you'd be if you overlay, as we have done, the previous cycle on top of this one. So this structurally tells me that investors in this market are behaving exactly as they did last time, which is that they're waiting for this expectation of something. So what's going to make this number change? And the likelihood is that, well, you can see what made it happen over here. We went above 3,000, and then people just started selling off because they started realizing what their wildest dreams were of the cycle coming true, and as such, I think that if I was to see, for example, us to blow below 40k and this to start to turn down, that would be indicative of people giving up within the cycle. So this is very important to me in terms of psychology within the market. And so, I look at various things, not just price. This is a complementary thing alongside the actual price action itself. And similar to that, actually, you can see this is what's called the HODL waves chart. You've probably seen this before.
Yeah.
And what this shows is the sort of progression of the length of times that people have been holding those coins. So it's kind of drilling down a little bit into that 54%. And you can see that basically since we bottomed, we have actually had people holding their coins for longer periods of time. And we did not see that really in the previous cycles so much. So it does kind of lend itself to me that we're doing something similar back to 2013, where people are still looking. Basically, we've had a reaccumulation phase, right? I mean, we blew up far too quick, far too fast, as we've shown, versus the 2017 cycle. And since then, we needed to shake out all of those new guys who came into the market, got their free lunch, and then got a lesson in volatility to the downside, having just had a nice one to the upside. And so as such, I think that's what this is, which is that reaccumulation going on there. So, So yeah, it's a complex thing. It's built upon many different pieces of information, including another one, which is the Bitcoins on exchange as well, which are clearly in divergence with price. Again, if we started coming down below 40k and then this was massively ramping up, again, I would be really concerned about the situation, but doesn't seem to suggest that at the moment.
Okay. Let's suppose our wildest dreams come true. Like kind of you mentioned last cycle, it was, once it broke above 3K, or like 5K, 10K, all that stuff came relatively quickly. Even 10K, we basically just blew past, like it wasn't even there. We went like straight to 20. if we were to go to these, let's say we do make it to $200,000, which does seem like it lends itself as a distinct possibility. I know recently Bitcoin hasn't been moving as much. Every all-time high is just kind of a few $1,000s above the most recent one. But let's suppose we get into that next leg, right, where we actually go up and Bitcoin starts moving again, and we go 70K, 80K, 90K, and let's say we go up to 200K. Do you have any type of ideas of where that would land us in the next bear market, assuming we were able to make it to those higher prices?
Sure. Well, thinking back to, obviously, like I know which chart you'll be thinking of, which I shared, where I hit that sort of 20K top and 3K bottom. Normally, you expect to see an 85% drawdown from a huge parabolic advance. At risk of quoting it this time, it will be different. I do tend to think it would be slightly different because generally speaking, I can't see us starting to attack, like gold's market cap's up at sort of 500K. I mean, that's a bit of an arbitrary number. It's debatable, but I think that there'd be too much vested interest to potentially come back down as much as 85, particularly also actually given that we've seen this massive expansion in M2, right? Have things really increased in real value? Well, not necessarily. We've just got a ton load more money. So are we going to see an 85% drawdown? Seems a little bit less likely when all of the way through this we've seen the money supply expand by such an extent. So I don't think 85% will potentially be where it's at. What I remember back in 2017 was this particular low at 3,000, and the price action there when the price came back to 3,000 was so ferocious to the upside. It was such a memorable event that I was pretty sure that that's where the bottom was going to be. And I don't really feel like I've seen that yet. I mean, you might argue that's what we saw coming out of 30K, but this was a massive reversal pretty much in like one day or something. Had quite a few days of dripping down and then it reversed massively. So I think it's tricky to say at the moment. I think the safest thing to say, if there's such a thing, would be that probably these previous highs, if we can consolidate out of this and get out of here, a lot of people will get left behind. A lot of people will end up getting bought into the fact that this is ultimately going to be a double top or whatever, cycle end of the year, and then we might move quite strongly out of here. Those guys get left behind, and let's say we do get to 80 or 90K relatively, let's say Q1 next year. I would expect the retest back to 60 to be quite that sort of ferocious bit of price action. You can see actually it is kind of around the logarithmic, the center of the logarithmic line. We ended up coming back around there, so let's say 50K, 50, 60K is sort of where I would expect us to wind up.
Yeah, I mean, I think that makes sense. I mean, you could always, I think too that if you think about 60K, like we've spent so much time at that level, it seems like there would be some support in the next cycle, like in a future bear market bottom. Are there any other indicators that you're looking at as we sort of navigate the the cryptoverse? Are there things that you want to see occur that would give you more conviction on where you see things headed? What are some final thoughts?
Well, I mean, in the immediate term, as I sort of say, I'm a trader, relatively short term. I used to be a lot more short term in my trading, and to be honest, I flick on the sort of short term, medium term switch depending upon the price action. And what I would say is that you do need to try and think like, what sort of trader am I in this market? Because the volatility is it's certainly addictive. Anybody who looks at this market will know they're probably refreshing their phone and waking up and looking at the Bitcoin price first thing in the morning. So you need to know who you are in the market. So some of the things that I look at might not be relevant for some people. But obviously, because of the short-term time frames, I do tend to look at obviously what's going on in a day-to-day basis. And right now, at the moment, there is a little bit of cause for concern. One of the things that I think is really important is obviously the leverage element within this market. And one way to look at that is the open interest over market cap ratio. And you can see when this generally gets quite heated, we tend to be looking to be topping until we get a flush in leverage, which can work both ways, incidentally. You know, obviously up here we've got heavily leveraged with people betting to the downside, and then that got flushed out. So it does tend to be indicative of a reversal in the market, and at the moment we are at that level right now. So what I do know is that what happens next is highly likely to be extremely volatile. So I like to keep an eye on that. Another tool that I like to look at is, well, effectively open interest is one of those parts of the components of what I just mentioned there. And you can see that open interest has been really flat for quite a while, and we just haven't seen that dump, which we have seen, you know, towards the end of the move. So you get these big moves down in open interest, coupled with like big liquidation events. Even, you know, back down here at the 52k sell-off, you know, we saw a big flush out in open interest, and we just haven't seen that at the moment, and that is cause for concern if you're in any leverage position. And I'm not going to just say it's cause for concern to the long side or the short side, because right now it's a concern if you're in a big leverage position, would be generally what I'm sort of suggesting here. Another thing that I like to look at is the bid-ask ratio in the market, so that being the number of people who are looking to buy on the book versus the number of people looking to sell. And generally that is weighted at the moment towards the bulls, which is obviously a good thing. This is coming down almost sort of 30% down towards 40k there, which is that, you know, effectively that massive bid over at Bitfinex is looking to hold the market up. So that kind of tells me that maybe what we're seeing is a bear trap, which is where we have traders who are well aware of this sort of leverage scenario, which we have, and you know, people got really excited with the new all-time highs, which led us to think, well, you know, we're gonna go to the 90k straight away, sort of thing. Whereas actually, you know, the game's a little bit more complicated than that. And there's an opportunity for whales to reaccumulate, given that they know that there's this potential over leverage in the market, and so these bids down here potentially are the people who are driving the price down, right? So that's a couple of things that I like to look at, but yeah, I mean, fundamentally, it's just the classic stuff. Really, is like trying to keep an eye on what's going on in the Bitcoin market, looking at the higher time frames, and then trying to establish, does the price action marry up with the fundamentals which we're actually seeing, and I think that's key really for everyone to pay attention to.
Yeah, I mean, I think that makes a lot of sense. And going back to the leverage positions, as you said, right? I mean, it's, you know, short, you know, whether you're short or long, it does seem like we are approaching pretty volatile times, right? Bitcoin doesn't stay just kind of humdrum for very long before it makes a nasty move. And it can sort of, you know, a lot of times it'll do that fake out, like you were showing us back in 2017, where it was sort of trending down a little bit, and then it had that final like washout, right? And then right there, yeah. So, you know, if you were immediately long, you could have gotten wrecked, and then the people that were then maybe shorting at the bottom, they also got wrecked. So Bitcoin has a way of wrecking traders both ways, I think.
Absolutely.
Yeah, and I think that's great. I mean, I think it's a great thing to look at is kind of like, what is the open interest? What you know, are people shorting? Are people longing? What's the funding look like? I mean, as you showed, like that chart you showed, it looks like every single time we've seen a major reversal, it was sort of at a spike on the open interest, right?
Yeah.
divided by the market cap ratio right there. Yeah, like every single time we see a major reversal, whether it's like a couple week reversal or whether it's a several month reversal, it does appear that every single one of them, and we are approaching, as you guys as you see, right? I mean, like we're approaching, we're not quite there yet, but we're approaching sort of the same level that we were at back in at the end of July. Would you, and I'm guessing you're sort of agreeing with that.
Yeah, absolutely. I mean, the key thing really is for me at the minute, the 100 DMA came in back down here and supported us at the 40k level.
Right.
And, I know there's a lot of people interested around this level, including myself. 53 at the minute, it's around about. So, what happens next, when everybody thinks, oh, okay, we're going to come to 53. Well, potentially we bounce back up here and try and draw everyone else in, and then we actually come back down a little bit and realise some of that washout per se, because at the minute it doesn't feel like we're going to completely nuke down below here because of the fact that there's so much buying interest here at the moment. But that remains to be seen at the moment. I mean, the classic thing you can see over here was we had the top, which we've got here. We came back down. We lost that 50 DMA. Losing the 50 DMA is a big, as I showed before, that's a big old problem for Bitcoin. Some traders just automatically short, when the daily's below the 50. And then we came back to the 100, which is, kind of this theory over here. So the big line in the sand for me is, if we do bounce, can we somehow work our way through here and then go higher? And if we can start closing above 65 again, it's absolutely game on. However, we need to see what happens with the open interest, and if this was to play exactly the same, well, the risk is we end up coming right back down to here, which would take us to kind of where this bottom, or the major bottom, was over here, which is this is to this as this is to this,
right.
And that's where that bid is, right? So these are the really important things at the moment for me. And as I sort of alluded to before, I mean, being in a massive leverage short or massive leverage long right now feels like gambling to me. And I'm a risk manager. I like to call myself a risk manager. That's kind of where I've come from in finance. And so as such, sometimes there's a good time to not really be looking to be in a particular trade other than to manage your risk. And the lower we go, the better the opportunity. What you don't want to do is kind of sell down here, wait till we get drawn in up here, have this sort of complacency shoulder, get really long in here and then get annihilated, and then you end up with nothing, and we get to that beautiful buy-in place again. So so the market is designed to mess with your head, and the more volatility in a short period of time, the worse it's going to be. So certainly, unless you're experienced with managing risk, with like things like leverage, it's a dangerous game for most people.
Yeah, for sure. Well, I mean, I think this, your perspective on the market is certainly, it's really interesting to hear. I feel like, you've shown us a lot of different indicators, and, I think a general outline for expectations that we'd like to see, some macroscopic targets we'd like to go, but also at the same time sort of managing our risk and say, look, like this is the expectation, but if we see certain types of price action, especially I imagine if we're going below 30K, that'll be it for a while. And we'll have to, but it's hard for me to imagine that happening. But
I mean, we have seen gold and silver start to sell off a little bit today, as well. Off the back of Chairman Powell getting established in his role. So there is that weight on the market, and you just want to be well positioned to take advantage of any downside, particularly when we're sort of all agreeing that we're in this sort of secular bull cycle.
Right, of course. Yeah, I mean 40K too that's where that was where the 21-week EMA, the 20-week SMA, that's where it was when we held it back in September. So that would that would certainly be an important spot, I think, for us to hold as well. I mean, 40K I think is a pretty important level to stay above for sure, in order to maintain the integrity of this cycle. But yeah, I mean, anyways, I think all these indicators are really interesting, and I mean, I want to make sure people, if they, if they're not subscribed to you, we'll leave a link down in the description below. Also, I know you have Twitter, and then also everyone should go check out your website. It's Decent Trader, is that right?
That's right, yeah.
DecentTrader.com.
Yeah.
And we'll leave a link to that in the description below as well. I actually went on your channel a week or two ago, and I think it's important that we do these things, explore new ideas, and hopefully, we'll just share more ideas in the future. We'd love to have you on in the future, especially as we are hopefully approaching the dream phase where we see the prices one day this cycle that everyone has kind of been dreaming about for the last several years.
Sure. I think one thing to mention actually is my business partner's Philip Swift, who's the Pi Cycle top man. So I think you should possibly have a chat about his views on that as well. I think you might find that interesting.
Yeah, definitely. I mean, Pi Cycle was definitely, I mean, nailed the last one, right?
Yeah.
So yeah, for sure. We'll bring him on too, where we like to do these collaboration series where we bring people on that look at the market and in various ways, because we're all sort of just wanting to see Bitcoin do relatively well here and trying to figure out, well, how do we time this thing? How do we make sense of what's going on in the market? How do we not get swept away with the sensationalist stuff that kind of has a way of sweeping you away when the market goes parabolic?
Absolutely. But thank you very much for having me on, Ben. Now, obviously, it's a pleasure to talk to you, and I really appreciate the work that you do on your channel, and the quantitative sort of rational thinking approach is certainly strikes a chord with me in the way that we try to do things as well. So yeah, thank you for having us on.
Sure, no problem. All right, everyone. Last reminder: go subscribe to Filb Filb and check out his Twitter. And thank you guys for tuning in. Subscribe here if you're not, and I'll see you guys next time. Bye.